Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, it's June 6, 2012. I'm looking here at the Yahoo Finance page. We'll get at the chart in a minute, but for just a second, let's just look at what happened for the day. You're up 286 points on the Dow Jones Industrial Average, and all of that is about the hopes that the U.S. has on the Fed interventions. And you can scroll down right quick and look at the news headline down below that. You can see that the Fed survey finds U.S. growth hiring mostly steady. Well, let me think about that. The last time we had a meeting, they said, well, we don't see any reason to actually start stimulating again at this moment. Now, the Fed survey finds, the most recent Fed survey finds that U.S. growth hiring mostly steady. Why do we expect the Fed to intervene now? They won't. They will do exactly the same thing that the ECB did. They basically said, yeah, we'll stand behind Europe, we'll do whatever's necessary, but we're not really going to do anything. Have a nice day. The Fed's basically going to go tell Congress the exact same thing. At that point, the market's going to go, oopsie, we've overshot to the upside. Now let's go look at the charts. Today we're going to be looking at the VIX and the S&P 500. This information, of course, can be applied to any chart here in the U.S. Also, you can look at Canada's markets and see the same basic situation forming there. The main thing I want to show you here on the VIX, we talked about this yesterday, had this shooting star formation here, a little down day yesterday, and we told you to look for this to continue to move to the downside here. However, I would not attempt to trade this in the short side because I don't see a lot of downside potential, because this previous resistance line, this blue line right here, we had a couple of different touches there, back there, where you had some resistance here as well, again here, again here, again here, and finally break out above that. Then this support becomes resistance. You see it here, you see it here, and you're about to see it again. That's why you should not be looking to short the VIX at this point. You should be looking for an opportunity to get long the VIX, but you want to see the right signals. I won't jump in unless I see a hammer candlestick formation, something of that nature. When I see that, then I may take a position on the long side on the VIX. The main thing here to understand about the VIX is that it runs the inverse of the S&P 500. Therefore, what you're seeing in the VIX, you should be seeing, and you are seeing in the S&P 500. You just don't know it yet. You're about to find resistance in the S&P 500, and that will come in step with the revelation by the market that the Fed is not really going to announce any new movement to stimulate markets, and that's when you'll start to find that resistance there. That's important, and you're going to want to take advantage of that setup to go short the markets, long the VIX, that type of thing, because again, we still have the election in Greece coming up in a couple of weeks, and that's going to be the main thing that we go back to. Once we realize that the Fed is not going to stimulate the markets at this moment, at this point in time, he's going to leave it basically up to Congress. That's my opinion. And of course, at that point, we will start focusing again on what's going on in Europe, and it's not getting any better. So that's the way I would play this market. Taking a quick look here at Toronto Stock Exchange, the TSX, you can see that we have a clearly defined situation here where you have this low close here and a higher low close here. You'll notice that in this situation on this particular chart, you did not find that bullish divergence that we showed you on the U.S. charts. You can see if you go back to the corresponding time periods, the ultimate oscillator, low point here, corresponding low point here, up here, you can see that you were trending up, confirming this move here. So it wasn't a bullish divergence like we saw in the U.S. markets. So then we move up here for a couple of days, and what do we get? We get a shooting star formation. What's more important to me at this point, this shooting star formation, is of course agreeing with this one here, this one here, this one here, all these telling you there's major resistance there, which you should see there anyway, because you had a previous support here that was actually breaking down. When that support broke, now you have resistance there. So that makes all perfect sense to me. I don't have any problem with that. But the main thing here is the fact that you have this close here and this higher close right here. Draw ourselves a little trend line. You can see that it's sloping up. Yet the corresponding time period on the ultimate oscillator, high point here, lower high here. So in this situation, this particular chart, you did not have a bullish divergence, but now you're forming a bearish one. That again is another reason to be cautious this market. I know you've had a big day to the upside. A lot of people are getting all overly excited here. Don't do that. Make sure you read the chart and read what's going on, and then look at the headlines, see what's moving markets, and determine for yourself what's going to happen next. That's the most important thing. Don't be looking at what the market's doing today. Ask yourself what happens next. Last chart I'm going to look at today will be the S&P 500. I've already covered the four major U.S. markets on yesterday. No sense in going over that again. At this time, there's really not a lot more I can add to it other than one fine detail, which is very important for those of you who are buying this market bounce. If you're making money on that, that's fine. Advance your stop. Make sure you have no risk on the table on this upside move here. The main thing here is don't chase this market. At this point, your low closes here. Your secondary close is here. You can see that was a down slope. We talked about that on Friday as well as yesterday. you have this corresponding low point here on the ultimate oscillator. Again, here you can see that in this case you had an uptrend, and then down here you had a downtrend, telling you that this is a bullish divergence. This secondary move here was not going to be sustainable. She was going to bounce. At this point, your close is here and here. You have now corrected that issue. So jumping on now, you don't have the same benefit that you had before the past couple of days. So you're not going to have that same benefit. Therefore, buying now means you're buying into the top of it. I don't want you to do that. So just be cautious if you're out there trying to buy. Keep in mind you've lost the edge there, so to speak. Okay. Right now, I'll be looking for the top. I'm not going to call it any particular point, but I'll be watching for it and keeping an eye on when we start to see another shooting star formation like we've seen here, and that could be the next area that you find that resistance at. Again, the same level that we've already found it before. You can see we're support, we're support, we're support, we're support, we're support, we're support, and we close below it, and that means this support becomes resistance. It's also in line with the 50-day moving average, and we'll also be watching the ultimate oscillator. She moves up to the 70 line. That's typically where you get your peaks. So whenever you get that, be looking for the sell signals and get short and ride it on the way back down. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I will see you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.